Today we are going to begin to dissect a paycheck as well as understand where our money goes from working. After successful completion of this unit, you'll be able to understand what taxes will be withheld from your paycheck, how to file a 1040 Easy, and to get a refund, understand a W-4, as well as various deductions. So where does your money go? Almost 31% of an individual's paycheck is deducted. Since the U.S. operates on an ongoing payment system, taxes are immediately paid on income earned. This basically allows the government to collect taxes at a steady rate, then all at once towards the end of the year. When you start a new job, your employer will ask you to complete a W-4 and a Form I-9. These two documents are important steps that must be filled out. A W-4 is the withholding form each new employee fills out, stating the number of allowances or exemptions. The more allowances listed, the less withholding tax will be taken from the individual's paycheck. The lower the allowance, the more taxes will be taken out. However, once you file taxes, you may receive a refund check. As a teenager, you should put either 0 or 1 for your allowance. In order to complete a W-4, you must understand the various lines of the document. On line 1, the employee will need to print or type their legal name and home address directly below their name. On line 2, the individual will need to include their Social Security number. On line 3, he or she will check the appropriate box to indicate their marital status. And on line 5, the individual will need to enter 0 if not claiming any allowances. Once complete, it is important to sign your name and date on the form before giving it to your employer. In addition, you'll want to keep a copy for your own personal records. A Form I-9 is an employment eligibility verification form that verifies if you are legal to work in the United States. With this form, you must provide proper identification. A pay period is the length of time for which an employee's wages are calculated. You may get paid once a week, bi-weekly, which is every other week, or twice a month, for example, on the 1st and 15th of each month. It is important to understand the difference between gross and net income. Gross income is the total amount of money earned during a pay period before deductions are made. This is calculated by multiplying the number of hours worked by the hourly rate. However, if a person is on salary, it is the total salary amount divided by the specified number of pay periods. Net income is the amount of money left after all deductions have been withheld from the gross pay earned in a pay period. This is the money, or the amount of money, you'll see on your paycheck. Your take-home pay or net income is much less than your gross income. This is because your employer has taken out deductions. Your employer will collect those tax deductions and send the money to the appropriate federal or state agency. Some deductions are involuntary, such as federal taxes, FICA, as well as state and city taxes. This means you must pay them. Others are voluntary, including medical, retirement, life insurance, disability insurance, union dues, etc. An example of a tax that is withheld from your paycheck includes the federal withholding tax. This is determined by your Form W-4. This tax is the largest deduction withheld from an employee's gross income. In addition, there is the state withholding tax. This percentage is deducted from an individual's paycheck to assist in funding government agencies within the state. In Michigan, our state tax percentage is 4.35%. The Federal Insurance Contribution Act, otherwise known as FICA, pays for Social Security and Medicare. Social Security is our nation's retirement program, which helps provide retirement income for elderly and pays disability benefits. This is based off the percentage of 6.2% of gross income. The employer will then match the contribution made by the employee. Medicare is the nation's health care program for elderly and disabled. You can start collecting it at the age of 65. It provides hospital and medical insurance to those who qualify. It too is based off a percentage of 1.45% of your gross income. Additional voluntary withholdings include medical insurance. This is the amount taken from your paycheck for medical benefits if the employee has to pay part coverage for the plan. If you look at the example for a family plan that costs $16,000, an employer may pay 80% of this, while the employee is responsible for 20%. Finally, many individuals have deductions taken out for their retirement. A specified percentage of the contribution is often matched by the employer, for example in a 401k. We will learn more about this in later units. The last term you'll need to be familiar with is year-to-date. This is the total of income and deductions from an individual's paycheck from January 1st to the last day of the pay period. We have now completed the video dealing with taxes and your paycheck. Once you have completed the entire lesson in video, you should be able to understand the process of filing or filling out forms for employment, as well as the various voluntary and involuntary deductions and withholdings.